Bitcoin to $20,000. Is this even a realistic number right now? And is this down move actually going to continue to the downside? And actually we're going to see something, in the vicinity of $20,000 area. Is that even possible? So according to the recent survey, it is possible. So let's have a look at this survey and let's see actually what it means, and should we actually sell our Bitcoin right here at 40,000 and buy it back at 20,000? And certainly I'm going to show you in this video some incredible data that you need to see, you need to understand. This is going to be a very important video, guys. Please watch it from the beginning till the end. I see sometimes comments from people who are just so confused. But the reason why they're confused because they don't watch every single video. They skip videos where I give updates. And then they also don't watch the videos from the beginning and until the end, and then they are confused. So please don't be a confused Karen. Watch videos from the beginning and until the end, every single video. It's like 10 minutes per day, every other day. Very simple. Okay, so let's get into this. And I'm going to also give you a warning about tomorrow. Tomorrow is a huge day, and it is probably going to be more important than most realize. So again, watch this video till the end. Let's jump right into this. So, and I'm going to come back to the chart. We're going to take a look at a bunch of interesting stuff. So first thing is this right here, Bitcoin going to $20,000. So basically there was a huge survey conducted by Deutsche Bank, and they're basically asking people, what do they expect from Bitcoin? And here are the results. So in the US, about 35% of people expect Bitcoin below $20,000 by the end of this year. Interesting. And then Eurozone about 30% and UK about 30%. So the predominant majority of people who were actually asked expected the Bitcoin price to be below 20K by the end of this year. And then about 10% of people, about less, so actually expect Bitcoin to be above $75,000. So who is right? And guess what, guys? This is the most important thing you need to understand about this, because I think this also could be coordinated FUD to just shake you out because, of course, if you can buy back Bitcoin at 20K, why should you hold it from 40 down to 20 and then up to 80, whatever? So what you need to understand about this is just one word right here. Retail investors. This is all that matters. You know why? Because the market, most of the time, does the absolute fucking opposite of what retail investors actually expect. So this is like Jim Cramer, inverse Cramer. Always do inverse retail. It is almost 100% guaranteed strategy. So when all the Karens and idiots and all these couch experts are like blah, 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 expect Bitcoin at 20K, expect it much higher. Much higher. And I think that this is more accurate by the end of the year. 75, like 50 to 75K is my target for the end of 2024. So this right here is just doom and gloom of people who are just the opposite of logic. So let me show you some logic that actually does make sense. And it is this right here. So let's have a look. This is Bitcoin accumulation of big whales that we know as big funds, which is BlackRock, Fidelity, Bitwise, ARK Invest, Investco, VanEck, etc. So what we want to see here, this is the ETF and how much they're actually accumulating per day. So let's see, January 10 is basically when they started. For example, BlackRock. They started with 228 Bitcoin. The next day, they bought 2,400 Bitcoin. The next day, they bought 8,000 Bitcoin. The next day, they bought 5,000 Bitcoin, 8,000 Bitcoin, 3,000 Bitcoin, 5,000 Bitcoin, 6,500 Bitcoin. So BlackRock is buying on average 5,000 or more Bitcoin per day. Okay. Let's take a look at Fidelity. 5,000, 2,000, 8,000, 4,000, 5,000, 4,000 per day, per entity. Bitwise, 5,200, 1,000, 1,500, 1,300, 1,000. Same thing. ARK Invest, 1,000, 2,000, 3,000, 1,000, 1,500, 1,600. Per day, guys. Per day. This is unfathomable. And yes, you're going to say, oh, why is the Bitcoin price going down? And why is then we have overall, not that big of inflows? Again, because of Grayscale. So Grayscale, a lot of people are coming out of Grayscale right now because they're actually the most expensive in terms of the fees if you want to be getting the ETFs. So a lot of people are actually moving to other ETFs right now because they're the most expensive. It makes no sense to hold it there. And yeah, a lot of people could not withdraw for so long from Grayscale. We've discussed this. That's why we still have this FUD still about Grayscale dumping Bitcoin, because a lot of people are exiting Grayscale. But again, this is short term, because once everybody who wants to be out of Grayscale gets out of Grayscale, they will be out of Grayscale, and all we're going to have left is accumulation. 5,000 per day, 5,000 per day, 1,000 per day, 1,000 per day. This is insane. This already in the first days of the ETF, we have more purchasing than the actual mining of Bitcoin. And it's without even retail. It's without even FOMO. It's without even anything yet. Just imagine. So then, will this come to fruition by the end of the year? Once Grayscale actually stops dumping because they have nothing left to dump? And how crazy is this? And we have, I'm going to discuss my price targets in just a second, but just let this sink in. Certainly, this for now is like minus 11,000, 14,000, 10,000, minus 14,000, minus 14,000. It does look a bit painful. But this, guys, once again, is short-term. Grayscale is short-term selling. While this, BlackRock, Fidelity, Bitwise, ARK Invest, this is long-term. And this is going to keep happening and more and more and more and more. So total, excluding Grayscale, which I think is a fair one, per day, 15,000 Bitcoin, 16,000 Bitcoin, 12,000, 21,000, 6,000. So this is insane per day. And this is not even FOMO kicking in yet. This is not even the institutions realizing this just yet, because it's going to take time and liquidity to flow. So don't look at this. Look at this. This is of utmost importance. And what you also need to understand, therefore, for me, what I'm personally doing is I'm looking at liquidity. And where do we have liquidity? I think in terms of Ethereum, and I showed you liquidity on Bitcoin previously, but on Ethereum, we have big liquidity standing at $2,000 right now. Look at this bar right here. So, and then besides this, there is a lot more liquidity to the upside than actually to the downside. So therefore, that actually this confirms my thesis for ETH. So we went from 2,700 all the way down to already 2,200. And here are my orders. Limit order at 2,150. Right here, and then also at $2,000. This is where we're gonna have this extreme of this liquidity right here, and this is where I'm actually gonna be getting into, like you can see the positions, 112, 120 ETH, 115. It's like 250 ETH just here. So if we're gonna go a bit lower, I'm gonna add a bit more to it, because I think we're not gonna go much lower unless something really bad happens. So this brings me to the chart before I give you a warning for tomorrow, because tomorrow is a huge day. Watch this video till the end. I'm not done yet. So for Bitcoin, what I want you to pay attention to, that regardless of us actually seeing a correction right now, so far we already dropped 20% from the peak, but I don't want you to worry about it. Why? Simply because look how we moved to the upside. Correction, pump, correction, pump, correction, pump, correction, pump. So it is normal. And if you actually pay attention as to how big the corrections are, for example, within the EMA ribbon. So EMA ribbon is a good indicator just to show you, you know, the price momentum, how it moves, etc. And normally, except for, you know, the FTX collapse right here, because this was just the peak of the boom, the bear market. So usually, you know, in this vicinity, we corrected here about 12% from the break of the EMA ribbon. Here from the break of the EMA ribbon, also about 12%. Here from the, let me just zoom it in a bit more for you guys. Here from the break of the EMA ribbon, we also did about, what, 13%. So let's see here. Let's say, okay, if we do a correction here of 13%, this would put the price at about 35K. So if we did the same kind of a correction. So therefore, in my opinion, like I am still sticking to my guns on my spot accumulation area. Right here, so let me remove the EMA ribbon. It's not necessary anymore. So spot accumulation area, about 37 to 38. And if you're taking a futures trade from here, then the stop could be about 36. And then if it does push lower, then we can see as to what kind of, you know, another trade we can take. Because again, it's all down to risk and money management. As for ETH, this is for me most interesting. Right now, I'm already in the long area, which is like this area in general is a good longing area. But as I gave you an update in the previous video, that I'm actually going to be taking it from the extreme of this longing area, which is 2150. And then, because it's just in general very strong order blocks. Also right here at 2K, we have very strong, again, very strong level at 2K in terms of liquidity. And also here, that's why, in my opinion, and ETH is also going to be stronger just because we can have this hopium from BlackRock for ETH spot ETF as well. So this is what you need to focus on, not this all, FUD bullshit, just, 20,000 per Bitcoin. I don't know what needs to happen. I mean, is it possible? Yes, but we need to have a black swan event of black swan events. I don't know, something new like COVID or some shit, like something as crazy as that, as powerful as that. So for now, these trades are just making perfect technical sense. Now, let me give you a very important warning for tomorrow, because what is tomorrow is PCE data. And actually, we have the PCE coming out at 8:30 a.m. Eastern time, and the previous one was 2.6. And on just general PCE, the forecast is 2.6, and also on the core one, which arguably could be a bit more important, we have the forecast of 3, the previous was 3.2, forecast 3.0, so we really want to watch this time. Why this time? Is because the CPI, actually on January 11th, it came in higher and substantially higher than the previous reading, because previous reading was 3.1, forecast 3.2, and it came at 3.4. So if we're going to have the same kind of a thing with PCE, which is preferred gauge for inflation for Fed, this could, at the end of the day, affect the interest rate decisions in the next meetings, and maybe keeping them higher for longer, which could, at the end of the day, result in negative impact on the economy, and therefore maybe some kind of a recession. Who knows? Like, we still don't know if it's going to be a recession or not. So far, if we look at initial jobless claims and unemployment, it seems that we are standing quite strong. The unemployment is low, but remember, once it hits, it goes up very fast. So for now, it's all good, and we really want these numbers to keep going down. So tomorrow is the day for this, and I think that if it's going to come in really bad, the markets could react also quite swiftly because of how important this is right now, especially after the CPI. So watch it tomorrow. I'm still sticking to my guns, and remember, if you want to be trading over on Bybit yourself, you can also use my link to Bybit down in the description of this video and claim up to $30,000 in initial deposit bonuses, and it will also grant you access, if you use my link to Bybit, to my trading community, where I post all of my trades and the trades of my team, and we're doing exceptionally well. There is 40,000 traders in there, and we're making crazy money. So this is one of the best trading communities, and the only way to get in is if you use my link to Bybit. You deposit, even if you already have an account, you can create a new one using your driver's license or some other ID that you didn't use in the previous account. Create a new one, and you will get access to bonuses, crazy community, one of the best communities, and just in general other bonuses here you can see on the screen as well. So, and as always, guys, important, if you copy my trades, you do what I do, please, well, for one, not financial advice, but number two, please spend the time, watch this tutorial right here that's popping up on the screen, because it's going to teach you how to actually take trades properly with proper risk and money management, so you can actually follow everything correctly. And as always, peace and love, Thomas Crawler. Stay smart, stay very rich, and I'll see you next video. Bye-bye.